Namaste, Namaskara, Vanakkam. Every attempt for CA intermediate income tax paper, you would find first compulsory question 15 marks from the total income computation. And you know what? In total income computation, the majority of the adjustments are asked from PGBP topic, guys. So I have prepared a master question in which I will be covering almost every adjustment which is possible in PGBP, guys. These adjustments are frequently asked in the total income computation. Total 25 adjustments I'll be discussing in this video. Just to watch this video in total income computation, PGBP adjustments will be like cakewalk for you guys. Okay, let's start, guys. First of all, always start with the credit side. Look at the credit side. Guys, in this profit and loss account, think logically. What is a profit and loss account? It is prepared for the purpose of business, and we are finding out the PGBP income. Whenever you find PGBP income on whatever credit side of profit and loss account is there, that means you have already credited the income, you have considered it as income. And whatever debit side you see in this P&L account, nothing but those expenses which you claimed in your profit and loss account. So now we will evaluate whether these items which are already appearing in the profit and loss account are pertaining to the business income and business expenditure or not. If they do not pertain, then we have to remove them. Yes. So first, coming to sales. Sales is a normal business income, no issues at all. Next, closing stock. It's a business item. Gross profit, no issues. Dividend from domestic companies 15,000. Guys, think logically. Dividend is taxable under IFOS. How can you come and show it under profit and loss account? Absolutely wrong. So what we will do, the adjustment will be, we need to reduce from here and go to IFOS and add in IFOS. That should be the adjustment. I hope you are getting it. Dividend is a income from other source income. You are showing under profit and loss account in business income, which is wrong. So in business income, you already added 50,000 rupees. So now reduce that 15,000 from the profit and loss account and go and add in IFOS head. Okay, next, income tax refund. Guys, understand, income tax refund, principal 5,000 and interest 450 has been received. Guys, what is income tax refund? Say for example, I paid more tax to government first, then the government will check, okay, he paid more tax, so let's give him back his money. So say for example, I paid excess tax of 5,000 rupees to the government is giving you back the 5,000. But say for example, I paid 6 months back 5,000 excess to the government. Now after 6 months, government is giving me back the 5,000. Would you agree? There is the opportunity cost for 6 months. Where is the interest? So government will not only give you 5,000 rupees which you excess paid, it will also add interest and I'll give you. So 5,000 plus 450, you are getting 5,450 rupees as income tax refund, including interest you are getting from the income tax department. Now guys, think logically. How much you already credited to profit and loss account? You already credited 5450. So this 5450 has to be reduced from the PGBP. But mind you, when you will go to IFOS, you will not add this 5,000 rupees. You will only add 450 interest component only under income from other source, guys. Sir, why sir 5,000 is not considered? Think logically. From your pocket, you paid excess income tax to government of 5,000 rupees. Government giving you back that 5,000 rupees. Where is the income? The income is only interest. So why under IFOS you only added 450 rupees? But here we are reducing 5450 in PGBP head because you consider 5450 as total income of PGBP head, which is wrong. So 5450 will be reduced from PGBP and under IFOS we will be adding only 450 rupees under income from other sources, guys. Next, income from agriculture net. Guys, income from agriculture, first of all, it is exempt income and it should not form part of business income. So first what we will do, we will reduce from here, then we will not do anything. Sir, why we not do anything? Because agriculture income is exempt income. Exempt income does not form part of your total income. So reduce from here PGBP because it is a wrong income credited to profit and loss account. So reduce from the profit and loss account and don't do any adjustment further. Okay, next, interest from bank on fixed deposits. So you have deposited some fixed deposit with the bank and the bank is giving you interest. How can it be a business income? It is other sources income which you took in the P&L account. So what I will do, reduce this 1,50,000 and go to IFOS and add it under IFOS head. Is it clear? Next, cash gift from father 90,000. Guys, think logically. Father is a relative. I do not deny. Totally agree with you. Father is a relative. And relative gives any kind of gift. It is not taxable under Income Tax Act. But guys, is it taxable under PGBP? No. Then how are you showing this 9,000, 90,000 rupees under PGBP? Wrong, right? So what I will do, I will reduce this income from PGBP. Then I will go to IFOS and I will show there and exempt under IFOS I will do. So under IFOS head, what I will do, I will show cash gift from father. I'll show and I will exempt under IFOS head. I will write the provision why it is exempt. Getting the logic. So I first reduce it from the P&L account because it is not a business income. Next, rent of 27,000. Guys, rent should go direct to income from house property. So I am reducing from here income from house property. I will go and I will offer under income from house property head. Next, winning from game or show on TV, net of TDS 15,000 rupees. Here you took 35,000. Sir, what is this, sir? Guys, winnings is taxable under income from other source head, but you have offered under PGBP. Think logically, it is net of TDS. It is saying net of TDS of 15,000. Now, TDS is 15,000. The actual winning is what? The actual winning is totally 50,000 rupees. Out of 50,000 rupees, 15,000 was deducted as TDS. Net 35,000 you took it under profit and loss account, which is wrong. So profit and loss account, first of all, winning should not form part of. So you will reduce only 35,000 from here. You will reduce 35,000 from the profit and loss account PGBP head. But when you will go to income from other sources, you will add 50,000 rupees, guys, mind you. Because guys, think logically. First we compute gross total income. What is gross means? Gross means not after giving the effect of TDS. Gross means the gross winning is 50,000 rupees in our case, guys. So under IFOS, you will not take only 35,000. You will take 50,000 rupees, guys. Always keep in mind this thing. Sir, why are we reducing here 35 only? Because you credited to profit and loss account only 35. That's why we are reducing only 35 here. But IFOS full 50,000 you have to offer it to tax. Then TDS credit you will get it later after you compute your tax liability. Next, dividend from units of UTI 10,500. Guys, dividend will be IFOS item. So I will reduce from here. I will go to IFOS and I will add 10,500 over there. Next, bad debts recovered 3 lakh rupees. Guys, bad debts earlier you had deducted in the earlier year. Now it is recovered. So it should be taxable, right? It should be taxable. And you have already credited into the profit and loss account. There is no adjustment needed. Earlier, bad debts you claimed as a deduction. Now you are recovering it. So whenever you recover it, it has to be taxed under PGBP head only, because bad debts are nothing but your bad debts are nothing but your business income only. Next, so we can see credit side all the adjustments are done. Let's go to left side now, which is debit side. These are all expenses which you claimed in profit and loss account under PGBP head. Opening stock, no issues. Purchase of raw material, no issues. Manufacturing wages and all, these are all business expenses, absolutely fine, you can claim. Administrative expense, no issues. SGST penalty, guys, under Income Tax Act and the PGBP head, there is a section 37, which says that penalty for a breach of law cannot be allowed. So you have already allowed. So we will add back this thing, guys. Correct? You already reduced the profit. Now increase the profit because you claimed the wrong expenditure in your profit and loss account. So I will add back SGST penalty. Next, loss on sale of shares short term. Guys, this is a capital gain adjustment. How can it come in PGBP? So you add back this loss and take it to short term capital loss under capital gains head. Next, salary, no issues. Salary, no issues. GST paid, sir. GST paid allowed. Yes, it is allowed. Guys, remember one thing. Income tax is the only thing which is not allowed. Any other taxes you pay, it is allowed. Mind you, income tax, interest on income tax, penalty for income tax, fees for income tax, anything you pay, it is not allowed. All other taxes are allowed. So absolutely no issues with the GST as well. Purchase of car, office use, guys. Purchase of car is a capital expenditure. How can you come and show it under here? So what we need to do? Add back 80,000 rupees. But mind you, you will claim depreciation on this car. Correct? So purchase of car for office use only purpose is correct. But this is not a revenue expenditure. This is a capital expenditure. So you need to add back this 80,000, but you will be reducing what? Depreciation on this car, guys. Next, housing loan repaid to SBI including interest of 88,000. House loan, that is a personal expenditure, guys. See here, rental income is offered. This rental property or whatever housing loan was taken for this property, you cannot claim it here. No, if you want to claim interest, you will claim it under income from house property head under section 24. And if you want to claim the principal, see guys, housing loan repaid is 1,88,000, in which interest is 88. So this 1,88,000 is nothing but split of 1,00,000 and 88. 1,00,000 is principal repayment, 88,000 is interest. Both are not business expenses. So we will add back this total 1,88,000 from here. Then you go to income from house property, reduce this 88,000. If you are offering this rental income, in that case you will be eligible to claim the interest, no doubt. And the principal of 1,00,000 repayment of housing loan principal, you can claim it under ATC, guys. Next, advance tax paid, absolutely not allowed. So you have to add back. I told you advance tax, self-assessment tax, anything income tax related you cannot claim. So advance tax is nothing but a part of income tax only. General expenses, no problem. Amount paid to Scientific Research Association under section 35. Guys, Scientific Research Association, if you do in-house, it is allowed full. If you do in-house, it is allowed full under both the tax regimes. Under both the tax regime, optional tax regime or default tax regime. But if you pay to other associations, it is allowed only under optional tax regime. Under default tax regime, you cannot allow. So imagine, so I will write both under optional tax regime, allowed means no need of any adjustment. If this had been a default tax regime, what I'll do is I will add back 1,50,000, because under default tax regime, if you donate any money to other scientific organizations, it is not allowed, guys. So only under default tax regime, I will add back. If it is optional tax regime, no adjustment is required. Next, books bought on 1/7/2024, annual publications by account paycheck. Guys, annual publication books forms part of your plant and machinery. It is a capital expenditure. So I will write add back. But guys, mind you, you can claim depreciation on these books, guys. Okay, so first adjustment is add back this books because it is a capital expenditure, and reduce the relevant depreciation. Relevant depreciation will be full rate of depreciation because the asset is purchased on 1/7, so more than 180 days used, so you can claim full rate of depreciation on this. The books annual publication rate of depreciation is 40%, guys. Next, public provident fund subscription 25,000. Guys, public provident fund subscription is actually a deduction item under ATC. You cannot claim it here. So I will add back this because this is a chapter 6A deduction item. There I will go and claim. Here I cannot claim under PGBP head. Next, interest to bank on machinery term loan 60,000. Absolutely fine. No interest to bank on machinery term loan means I purchased a machinery for which I have taken a loan. For that I am paying interest. Guys, if the machinery is used for business purpose, there is absolutely no issues. Next, motor car maintenance. If I had used this motor car for business purpose and for that maintenance if I pay, absolutely no issues with this also. Depreciation, guys, depreciation, if this is as per books of accounts, you need to add back this depreciation, guys, because we need to reduce the depreciation as per the income tax rules. This is book depreciation, so we need to add back first. Then we will reduce the income tax rules. As per the income tax rule, whatever depreciation will come, we will accordingly reduce it. Now, So those were the adjustments direct straight away from the profit and loss account, which is already credited or debited. Now we will look into the additional information. Okay. Further are the following are the further information relating to financial year. Okay. It was found that some stocks were omitted to be included in both opening and closing stock, values of which are like this. Guys, what is it trying to say is some stock was omitted, means in opening stock you have not considered 9,000, in closing stock you have not considered 18,000. Think logically, guys. First I will take opening stock. What do you do? Opening stock, you reduce from your profit. Correct? Here reduced from your profit because this is debit side. From your profit you only reduced 71,000. You forgot another 9,000 to be reduced. So very simple, you will reduce this from a PGBP. Got it? Next, closing stock 18,000 you forgot to add. See here, closing stock you add on the credit side. In profit you consider only 2 lakh rupees, but you were supposed to consider 2 lakh 18,000 rupees. So 18,000 you forgot. Add it to PGBP profit, guys. Next, administrative charges of 46,000 paid as commission to brother of assessee. Commission amount at the market price is 36,000 only. Guys, under PGBP there is one adjustment. Payments to related parties. If you make any excessive payment of expenditure to any related parties, that excess payment has to be disallowed. For your brother you are paying 46,000. In the market you pay 36,000 for the same expenditure. 10,000 excess you are making a payment to a relative who is a brother, and this administrative charges include, it is saying, means this administrative charges is where it is. See here, administrative expense already you debited in profit and loss account. This includes 46,000 rupees already. So you already claimed excess expenditure. Now you have to do what? You have to add back that 10,000 rupees. You have to add back. Sir, how you got 10,000? Sir, 46,000 minus 36,000 is the 10,000 difference which you excess claimed the expenditure. The profit is reduced. So if you have to increase the profit, 10,000 rupees you will add back. Next, salary includes the 10,000 paid to his brother, which is unreasonable to the extent of 2,000. Again, one more relative expenditure. 10,000 paid to brother, unreasonable is 2,000. Unreasonable, whatever is there, we will add back unreasonable to the profit and loss account. Next, assessee paid 33,000 in cash to transport carrier on December. Amount is included in manufacturing expenses. Assume that the provisions of TDS are not applicable. Guys, if you make any payment to a single person in a single day for any expenditure more than 10,000 rupees, if you make payment in cash or other than the prescribed modes, that has to be disallowed. But there is an exception. If you make payment to a transport carrier up to 35,000 rupees, you can make in cash, no problem. So this is well within the limits, 35,000 rupees. So no adjustment required for this, guys. For this, I will do no adjustment required for this. Next, sum of 4,000 per month was paid as salary to staff throughout the year, and this has not been recorded in the books of account. Guys, from the profit and loss account, you forgot one expenditure, which is a salary you paid 4,000 per month, guys. So 4,000 per month means what? Very simple. 4,000 into 12, that will be 48,000 rupees. You forgot to claim expenditure, so you will reduce it from your profit and loss account profit. Next, bank term loan. Interest actually paid up to 31st of March was 20,000 and the balance was paid in November 2025. Let's see what is the bank term loan given here. Bank term loan, see here, interest to bank on machinery term loan 60,000 rupees. You already claimed in the profit and loss account. But what is this additional information saying? Bank term loan, whatever is there, out of 60,000, out of this 60,000, actually you paid only 20,000. Balance was paid in November 2025. Guys, there is a section 43B. It says that especially those expenditures what are mentioned under 43B, the payments has to be made on or before the due date of filing of return of income. In case of individual, the due date of return of income, in case of tax audit case also, it is 31st of October. But you made payment. See, out of 60,000 rupees, 20,000 you made on March only, no problem. But the remaining 40,000 rupees, you made payment in the month of November, which is after the due date of filing return of income. 40,000 you have to disallow because you already took 60,000 as expenditure here. So 40,000 you have to add back. Getting it? Yes. Next. So 40,000 add back here, add back under section 43B, guys. Next. Motor car was put to use both for official and personal purpose. 1/5 of the motor car used for personal purpose. Guys, see here, this motor car maintenance, 10,000 rupees you claimed in profit and loss account. Now what is this information saying? Motor car was put to use for both office and personal purpose. So out of this 10,000 rupees, guys, what you claim in profit and loss account, 1/5 of motor car is used for personal purpose. So 1/5 is personal expenditure, 4/5 shall be business expenditure. So how much we will disallow? Only to the extent of personal expenditure, 1/5. So 10,000 divided by 5 will be 2,000 rupees. Only 2,000 rupees is personal expenditure out of the motor car maintenance of 10,000 rupees. See here, motor car maintenance 10,000. Out of that 2,000 we will add back 2,000 rupees because it is personal expenditure, guys. So we will add back 2,000. Add back 2,000 personal expenses we will add back, guys. Next. Depreciation as per income tax rules is 28 lakhs, including additional depreciation on new plant and machinery 1,50,000. See guys, depreciation I already told. This is as per books. As per books, he already debited 20 lakh rupees. We already added that back. But now we will claim this 28 lakh rupees of depreciation, guys, because this is as per income tax rules. So 28 lakh rupees we need to reduce from the PGBP. But guys, keep in mind one thing. Additional depreciation is also there in this 28 lakh rupees, which is 1,50,000 rupees. Guys, additional depreciation will be allowed only under optional tax regime. Under default tax regime, you cannot claim this additional depreciation. So if this question says that you compute under optional tax regime, no problem, 28 lakhs only we will reduce. If the question says the tax has to be computed as per the default tax regime, then I will not reduce 28 lakh rupees here. 28 lakh minus 1,50,000, whatever balance, 26 lakh 50,000 only I will reduce under the default tax regime. So this amount I will reduce under optional tax regime. This amount I will reduce under default tax regime. Hope that is clear. Next. Interest amounting to 2,10,000 short payment of advance tax for 234B. Guys, just now I told you, any interest you pay regarding income tax shall not be allowed. So, interest amounting to short payment of advance tax, we will not give allowance. Not allowed. Not allowed, guys. This is not allowed. Next. 3,50,000 paid to contractor for carrying out whitewash work at factory premises. Tax was not deducted on source and the contractor did not file his return of income. Guys, there is a section 40A1A that says that if you make any payment for expenditure and TDS was supposed to be deducted, if you did not deduct or you deducted but not deposited, in that case 30% of the expenditure will be disallowed if you are making payment to a resident, and 100% of the expenditure will be disallowed if you are making payment to a non-resident. But guys, see here, 3,50,000 is paid. So 3,50,000, 30% will be disallowed, guys. 30% will be disallowed. Next, contribution to PM National Relief Fund. Guys, this is not a PGBP item. This should go to 80G category. So under business expenditure, we will not allow this. Expenditure towards advertising charges in brochure of political party registered under so and so, 40,000 paid by check. Guys, contribution to a political party is allowed under 80 GGB or a GGC, but here you cannot claim the advertisement expenditure. First of all, it is not a business expenditure. So under PGBP, it is not allowed, but under chapter 6A deductions also, it is not allowed, guys. Next, contribution towards pension scheme of employees, 1,50,000. Eligible salary and dearness allowance of the pension scheme is 10 lakhs. Guys, if you remember, under 80 CCD, you can only claim under 80 ccd, you being an employer, if you contribute anything, you can only claim 14% of the eligible salary. 14% of 10 lakhs will be 1,40,000 only you can claim, but you have claimed 1,50,000, so 10,000 shall be disallowed, guys. 10,000 shall be disallowed. Next, industrial power tariff concession of 2,50,000 received from central government. This is an income. This is a income because the concession is in relation to the business, guys. So this is a business income. Next, expenditure pertaining to previous financial year 23-24 was allowed on due basis, but paid in current year on cash on 18/1 2025 35,000 rupees. Now understand this. Expenditure was pertaining to earlier year was allowed on due basis. Understand, guys. Last year, expenditure was taken as a deduction based on a due basis, mercantile basis of accounting. You already claimed, but payment is to be done now because that is payable. That year, as per payable, you claimed that. Now this year when you made payment, you made other than in the prescribed modes. Any expenditure for payment if you do other than prescribed modes, 40A3 will trigger, and that will tell that if you make payment more than 10,000 in cash, I will disallow. So 35,000 you made, which is paid in current year in cash, so disallow this expenditure. Next, audit fee for the previous year 23-24 was 75,000. TDS deducted but not deposited in the relevant previous year. However, TDS was deposited in this year. Guys, I'll tell you what happened. Last year, on the audit fee, TDS was not deducted. You think logically, last year if TDS was not deducted, and in that year, 30% of the expenditure would have been disallowed. So how much? 75% into 30%, whatever is there, 75,000 into 30%. Last year, they have already disallowed. Now, in this year, so last time he did not deposit the TDS. This year, he deposited the TDS. See here, 31st of December 2024 means in a 24-25 financial year, you deposited the TDS. Now you deposited, you have satisfied all the conditions of TDS. Now you will claim that 30% of 75,000 as allowance, because last year it was disallowed. This year you will allow it. Next, provision made on the basis of actual valuation for payment of gratuity. Guys, any kind of provision you made under income tax act is straight away disallow, guys. Straight away disallow. Okay, next, purchase of oil seeds of 50,000 in cash from farmer. Guys, under section 40A3 there is a rule 6DD. It says that if you purchase from any farmer in cash, absolutely no issues. So this will be allowed, no adjustment required. Tax on non-monetary perquisite provided to employee. Guys, tax on a non-monetary perquisite, if you pay any non-monetary perquisite to your employee, tax shall be also paid by the employee only. But employer borne this, which is of employee, so it will be disallowed. So this will be disallowed, guys. Next, salary payment of 10 lakhs to Mr. X outside India without deduction of tax. Just now I told you, if you make payment to non-residents and if you have not deducted the TDS, 100% will be disallowed, guys. 100% will be disallowed. Full 10 lakhs you disallow. Next, during the year he had taken professional services from lawyer. The legal fee was amounted to 1 lakh rupee. Tax has been deducted on time but not deposited with the government. TDS was later deposited in 15th November. Guys, if you have not deposited the TDS, still 30% of the amount will be disallowed. Next, he purchased goods worth 30,000 from Vishnu and Co., a micro enterprise. According to the written agreement between them, payment was to be made by 5th April. However, he made the payment on 15th April. Guys, remember one thing. If in case of payment being made to micro and small enterprises, macro is not a small MSME, macro enterprises are not covered here. Micro enterprises is covered here. Under small enterprises are covered, guys. If you have made any payment to the micro enterprise and if you have purchased any goods, in that case, if you have agreement, then within 45 days you have to make the payment, guys. If there is no agreement, within 15 days you need to make payment. March you purchased the goods, 5th April you made the payment already, so within 45 days you made the or he made the payment on 15th of April, guys. Within 45 days, if it is there, it will be allowed. Otherwise, it will not be allowed. Next, as per restructuring agreement with the bank has converted unpaid interest of 6 lakhs into a new loan account repayable in 20 equal installments. First installment paid in 2025. Vaibhav claimed the entire expenditure of 6 lakhs. Guys, if you convert a interest interest on loan into loan itself, in that case it will not be treated as payment made as per section 43B. Only to the extent of the interest which you actually make payment, you will be claiming the expenditure. So out of 6 lakh rupees, 20 equal installments, that is scattered into, out of that you have made a first installment was paid in March. You have made only one installment, guys. 6 lakh rupees divided by 20, whatever amount will come, that 30,000 rupees only will be allowed. Rest amount will not be allowed. The rest amount will be allowed only in the year in which you make the actual payment. Yes, next step. He received 3 lakh rupees from a debtor which was written off as a bad debt in the 2018-19. You see this bad debt recovered here. Bad debts recovered is 3 lakh rupees. You recovered the bad debt. Then what is it saying? Amount due from the debtor which was written off was 5 lakh rupees, out of which a tax officer had allowed only 3 lakh rupees as deduction in computing the 2018-19. Guys, this actually totally 5 lakhs bad debt was there in the earlier year. Out of 5 lakhs bad debt, tax officer allowed only 3 lakhs. Means 2 lakhs disallowed that year. Means on 2 lakhs you already paid tax in the earlier year. Out of 5 lakhs of bad debt, you were allowed only 3 lakhs as bad debt in the last year. Means in the last year you paid a tax on the rest 2 lakhs. Now in this year when you received this 3 lakh rupees recovered, you need not offer total 3 lakhs to the government. No, because on 2 lakhs you already paid tax in the earlier year. So in this case 3 lakhs you already offered, 2 lakhs you have to reduce, guys, because on 2 lakhs you have already offered to tax in the previous year. Next, on 1/4/2024, production manager working in the factory took voluntary retirement from services. Mr. Shobit paid 8 lakhs as compensation for his services. Guys, VRS you can claim only 1/5. He claimed total 8 lakhs. So what we will do, 8 lakh rupees we will not allow. We will allow 1/5 of 8 lakhs only as a deduction under voluntary retirement scheme. I hope this is clear. So this is how you understand each and every single adjustment of a PGBP, guys. If you are looking for a practice batch, which I finished just in 80 hours, full 100% English language, full income tax paper is covered, guys. Ping me on this WhatsApp number 8919258063. If you watch that at the speed of, if you watch that practice batch at a speed of 1.5, you can finish off just in 60 hours, guys. 12 days you sit, 5 hours you spend. Within 12 days, now also chance is there, you can finish off your income tax practice batch like this. All the adjustments are covered in the practice batch, guys. So you can buy that if you want to. Yes, and books also, if you want, you can buy. If you're new to my channel, please do subscribe. Do let me know in the comment section, how did you find this PGBP master question discussion, guys? Okay, share with your friends who are also in need of this kind of power packed one single shot. All PGBP major adjustments have been covered. So be tuned in this video, guys. Take care. Bye bye.